This is the AI news flash for August 12th, 12 p.m. UTC. First up, China's Tencent reported second quarter results today. Revenue rose 11% from a year earlier to 204.8 billion yuan, beating the 22.8 billion yuan average analyst estimate compiled by Bloomberg. Net profit, however, came in at 56 billion yuan, or about $8.3 billion. That is up just 0.7% year-on-year, and it missed expectations. Operating profit rose 9% to 75.6 billion yuan, while the operating margin slipped to 37% from 38%. The squeeze came from AI. Capital expenditure jumped to 52.8 billion yuan in the quarter, from 19.1 billion yuan a year earlier, close to a tripling as the company poured money into computing power and models. On the revenue side, AI is already paying. Marketing services brought in 43.6 billion yuan, up 22%, helped by improvements to the AI-driven ad recommendation model, and domestic games rose 17% to 47.3 billion yuan. Management guided to a substantial increase in AI capital spending, with a particularly large step-up in the second half as more China-designed ASICs become available. Second, Swedish AI coding company Lovable has raised $400 million in a Series C round at a post-money valuation of $13.3 billion. Its previous round last December was $330 million at a $6.6 billion valuation. That means the valuation has exactly doubled in 8 months. The round is co-led by Menlo Ventures and the Scale Up Europe Fund, which is managed by EQT. New investors include Balderton Capital, Carmignac, Kasek Ventures, Tencent, World Innovation Lab, and Regent, while returning backers such as Accel, Capital G, DST Global, and Salesforce Ventures also put in more money. Lovable lets people build apps and websites by chatting with an AI, and its customers include NVIDIA, Adidas, and Zendesk. Apps built on the platform now draw more than 900 million visits a month. The company plans to spend the money on winning business customers and growing headcount 50% to 450 employees across Sweden and the United States this year. Third, German digital rights group Aehr has filed a criminal complaint today, arguing that Meta's AI smart glasses break German privacy law. The complaint was submitted on August 12th to the ZIT, a specialist cybercrime unit at the Frankfurt Prosecutor's Office. It targets executives at Meta Platforms Technologies Ireland, the eyewear brands Ray-Ban and Oakley under the Luxottica Group, and the German retailers Fielmann and MediaMarkt. The legal basis is a federal data protection law that bans the sale of communication devices designed to film people without them noticing. The product named is the Ray-Ban Meta smart glasses, and the Wayfarer model in particular. Aehr is one of Europe's most prominent anti-digital violence organizations. The move marks a further tightening of legal scrutiny around AI glasses in a country where the right to privacy is held in high regard. Fourth, a flaw shared across the reasoning APIs of OpenAI. Anthropic and Google has been disclosed. It comes from a research paper published today titled Stealing Reasoning Traces from Proprietary LLM APIs. The issue lies in how encrypted reasoning blocks are handled. A block created in one session can be replayed into another, and in testing, even handing it to a weaker model exposed the hidden contents. The researchers set out 4 ways this can be abused: stealing proprietary reasoning for model distillation, extracting private data from other users' published traces, recovering harmful content hidden behind safe-looking answers, and concealing prompt injections inside opaque reasoning blocks. The scale is concrete. Across 6,708 public agent trajectories, the team decoded 315,320 thinking blocks. After filtering out benchmark sources, they identified 704 instances where sensitive information had been exposed. Fifth, Aehr Test Systems has received a $22 million follow-on order for wafer-level burn-in systems used on AI processors. The buyer is described as a leading provider of advanced AI training and inference processors and is not named. The order covers multiple fully automated Fox XP burn-in systems, along with Fox WaferPak full wafer contactors and WaferPak auto-aligners. The systems are expected to ship over the next 6 months for installation at the customer's manufacturing partner in Taiwan. President and CEO Gain Erickson said, The order represents another significant expansion of wafer-level burn-in capacity by the company's lead AI processor customer and further validates the Fox XP platform in high-volume production, as AI processors pack high-bandwidth memory and interface logic into advanced packages. Catching early-life failures before final assembly matters more than ever. That's all for this AI news flash.